Okay guys, so in this video we're going to be talking about market structure. Now market structure is a very in detail topic, so it does require you guys to be listening very carefully. Make sure you write your notes and refer back to them at the end of the videos. Okay, first of all we're going to break it down into sections. Section number 1, we're going to be talking about bullish and bearish trends. As you may or may not know from the previous videos, bullish means that price is going towards the upside and bearish means that price is pushing down towards the downside. Okay, now quickly starting off with a bullish trend. What is a bullish trend? A bullish trend is when price is creating higher highs and higher lows. What do I mean by that? Let me just quickly draw a trend of of bullish on the charts. Right, so if we go ahead and quickly get our text box so we can label everything. Hello. And then we'll just copy that over. Alright, so in a bullish trend, what does price do? Price creates higher lows and higher highs. Right, so we've got a low here and then price pushes up to create a higher high. Okay, then what does price do? It pushes down to create a higher low. Why is it a higher low? Because you see this high is higher than this low. Does that make sense? Sorry, this low is higher than this low. Okay, so price created a low here and then it created a higher high. So it created a high, then price came down. However, it did not breach below this point. It did not breach below the higher low. So this then becomes the next higher low. Okay, and then again price pushes up to breach the higher high, creating a new higher high. Okay, so let's just go ahead and label this one as well. So now we have a new higher high, right? And then what does price do again? It comes back down one more time. However, it does not breach this higher low. Okay, so then what happens is this becomes the new higher low, right? Now again, what does price do? Price now pushes back up. It breaches this higher high to do what? To create another higher high. Okay, so what does this mean? That means the market is moving upwards. Okay, the buyers are taking over the market, right? And then of course we do have sellers, but not enough sellers to breach this higher low. This is a very strong point. Of course, if market is moving within a bullish direction, once the higher high is breached, the next higher low becomes a strong point. Okay, of course we'll go more in detail about that later as well. Anyway, now price has breached this higher high and created another higher high, and what does it go on to do then? It goes on to create another higher low. We call this a bullish market, a trending market which is moving towards the upside. Okay, and of course it's not going to be as clean as this, right? But you'll see something like this. So if we go ahead and look at some chart examples, what can we see? We're currently on Euro USD. We can see now, if we look here, what is price doing? Right, let's just get our tool out. Price, of course, was in a bearish trend, which I'll talk about in a second. And then what did price do? It started creating higher low. It created a higher low here, then price created a higher high. Okay, then we've got another higher low here, then price created another higher high. Okay, then we've got another higher low, price created a higher high. We've got a higher low here, price created a higher high, so on so forth. Okay, so now we know that Euro USD is in a bullish trend from this period onwards. Why? Because price is following the bullish trend. Okay, it's creating the higher highs and the higher lows. Now moving on to bearish, of course, let's just get our tool out. Bearish is the same thing, but the other way around. Now, so for example, price is here, okay, then it creates a higher, it creates a higher low, sorry, it creates a lower high, and then it creates another lower low. Creates a lower high, then creates a lower low. Quickly just go ahead and draw this so I can label it out and explain it in further for you guys. So what is price doing at this point, okay? We can see that price at its highest was here, okay? Let's just mark this out for everyone. We call this point right here a lower high. Why do we call this a lower high? Because this was the highest point price was at before it went downwards, okay? Before price went into that bearish trend, we call this of course a bearish trend. Once price went into this bearish trend, the previous high of this trend was here. What did price do? It breached it to create what? It breached this point right here to create a new lower low. Okay, so we'll label this one a lower low. Now what has price done? It created a lower high. Now it's breached this point right here, the previous lower low, to create a new lower low. Okay, now what did price do? It came back up to create a new lower high. It didn't breach the lower high. It didn't breach this point right here. Okay, because again we know this was our previous lower high. So as it's under this point right here, price has now created a new lower high. Okay, so we just go out and label this, and then what did price do? It came back down and broke through the previous lower low. So that means now price has created a new lower low. This was the lowest point the market came after the move, okay? And the market passed the previous low to create a new low. Now what did the market do? It came back up, however it didn't breach the lower high, so therefore it created a new lower high, because of course we are going, yes, the market did come up, but because it's lower than this high, we call it a lower high. And then so on and so forth, price to create another lower, price to come and create another lower low. Let's just put this one back there. Why? Because it breached the lowest point that price was at beforehand, and then again it came back up, however it did not break through the previous lower high, right? Now if you go ahead and look at a few chart examples for this one, what can we see? We're currently on the daily for Euro USD. We can see for Euro USD that price has been creating higher lows, then created another lower low. Price created higher lows, then broke through the previous lower low to create another lower low. Price created another, lower high, then broke through the previous point to create another lower low. So again, let's quickly go through that again. Price has a lower low right here. The previous higher low was right here at this point. Okay, so this is the previous lower high. Price came down to create a new lower low, comes back up to create a new lower high. Then what the price do? It breached past this point right here to create a new lower low, came back up. It did not breach the lower high. What the price do? It came back down to breach this lower low, and then so on and so forth. Price came back up, it created a new lower low, then of course came back up, however didn't break through the previous lower high, therefore it creates a new lower high. Okay, so that's the difference between a bullish trend and a bearish trend, right? So we'll quickly go ahead and label them both out. So if we just get our arrow, we call this here, we call this here a bullish trend. Okay, price is going towards the upside, so this here we call a bullish trend. Right, now let's go ahead and label this one. We call this a bearish trend. Okay, the sellers have got the power, have got the upper hand against the buyers, right? So the market is moving in a down force. Vice versa, with a bullish trend, the buyers have the upper hand against the sellers. So the buyers are creating an up force in the markets. Okay. Now we'll go into further detail about breaks of structures and change of characters.